Hello and welcome to the Today's Money Masters. I'm your host, Jean-Paul Menu. The Today's Money Masters competition comprises 3 professional investors and a novice, each provided with $500,000 to invest. The participants will invest in stocks, bonds, and collective investment schemes. They'll share their strategies over a 1-year period, at the end of which the top portfolio manager will be declared. So let's join the masters for this exciting journey. On today's program, we're joined by Chrevaughn Legister, one of our professionals. He's from Chrevaughn Wealth Limited.
Thanks
Hey, Chrevaughn.
Thanks for having me, John Paul.
How you do?
I'm good, thank you. How are you?
Good, I'm fine, thanks.
Good.
Let's get right into it. You put 20% of your portfolio into Fontana. Why?
So, John Paul, simply put, there are some guiding principles that I go by when investing. Okay. You know, I look at what sector the company is operating in, what is the sector's performance to date, and what are the projections for that sector. I also look at, as I said before in one of our previous episodes, you know, I look at the earnings for the company. You know, where do I see the earnings going as well? Is the earnings strong? Is the balance sheet strong? You know, is the company highly levered? In fact, does it have a lot of debt on its books? So specifically in terms of Fontana, what do we have here? Strong growing company. You know, earnings have been good, revenue has been good. The projection for revenues, they look good to me in the last financial year. They may have tapered off a bit in terms of revenue growth, but that's just really because of the Barbican roadworks that had taken place and the state of emergency that had occurred in Montego Bay.
Okay.
But when you think about what has happened in Barbican, this may now work in the favor of Fontana, given the logistic changes that has been happening with that roadworks. Okay. So Fontana for me looked like what I call an undervalued company, based on overall performance. I like the fact that the company doesn't have a lot of debt on its books either. I think the debt is about 30% of assets. When you think about it, that's not a lot at all. Okay. I like the products that Fontana actually supply. I believe in investing in companies that I believe in, that I use their products. So when you look at the range of products that Fontana has, it's beauty supplies, cosmetics, sure, household items, sure, school items as well. And these are all things that persons are actually consuming, so to speak.
Right. And we think of it as a pharmacy, but it's much more.
It's much more than a pharmacy, I must say. Fontana is competing with the big boys. Big boys meaning like a Mega Mart. And as you may realize, they are now strategically placing themselves beside Mega Mart.
The new complex.
The new complex, on Waterloo. What does that mean? That could mean some more earnings growth. Sure. In fact, I strongly believe that. Okay. Initially, I was a bit skeptical, thinking that that new outlet would probably cannibalize some of the revenue growth from the Barbican Center. But I think the net effect will result in higher earnings for Fontana. Okay. And that is why I included it in my portfolio.
Okay, good. You're currently in first place, so you must be doing something right. You think you can stay ahead?
So what I'll say is that investing isn't a crystal ball. I'm happy to be in first place. That in order to maintain this position, I will continue to look at my portfolio. So what I've realized within this week, some stocks have fallen off in value in terms of the price has come down. Okay. This, in my opinion, may present an opportunity to enter and may include some additional stocks in my portfolio. As well, there are some stocks within my portfolio currently that I may have to take a look at, just to maintain that first place order that you've just mentioned.
Okay. Yes. All right. So we're gonna hope for the best.
Definitely.
But as you say, not a crystal ball. It's a bit of a gamble, this thing.
Well, it is. I mean, obviously, equities, stocks, doesn't move linearly upwards. That's not the case. And so you have to be very careful. As I said before, my investment decisions will always be grounded in research, and I will look at what's happening in the market.
All right, well, we're up on a little bit of a break, but we'll be back with a little bit more with Chrevaughn Legister. With Chrevaughn Legister from Chrevaughn Wealth. Chrevaughn, I see from your most recent statement, you still have 28% of your investment in cash. 28% of your portfolio in cash. What's the reason for that?
So, Jean Paul, just to remind you of an old adage, that says, do not put all your eggs in one basket.
Right.
Sounds very familiar, right? So that portion of my portfolio that hasn't been allocated as yet, I intend to use it for fixed income securities. Bonds, as you may know them as.
Okay.
So I am taking what you will call a portfolio management approach to investing. So that involves minimizing risk and diversifying my portfolio. So what would bonds within my portfolio do? There are three benefits I'll highlight to you. Preservation of capital, getting stream of income from the coupon payments of the bonds, and minimizing the overall risk. So the coupon payments that I would receive that would be an inflow of cash that will allow me to pursue purchases of additional securities, probably stocks. I'll determine in the future.
Going forward, okay.
Preserving my capital is important. I think that's one of the number one rules of investing. Don't lose your capital at all. So at the end of holding the bonds, I'll get back my principal that I would have invested.
Okay.
Also, I may consider investing in unit trusts. You may be familiar with unit trusts. These are less risky investments.
Okay.
And I'm seeking to explore the option of investing in money market securities, such as repurchase agreements. These are short-term liquid instruments. Also would provide me with cash flow. I can sell them within the short term if necessary, if I need additional liquidity, which is cash. And I may deploy some of those funds that I receive to purchase in additional stocks to put in my portfolio.
Okay.
And so really, that's the reason.
The strategy this early on in the game is to hang on to that 28% cash for now, and then as you go forward.
For now, it would be foolhardy of me to have all my funds invested in equities. As you may know, equities, and I've said before, equities is not linear. It doesn't go up all the time, and as such, you have to seek to maintain a balanced portfolio and minimize the risk as possible, and have some trade-off offsetting when the market goes down or when the market increases.
Absolutely. And as Andre said last week or the week before, this is not a sprint, it's a marathon.
He hit the nail on the head with that one.
Right. All right, we're going to leave it there with Chrevaughn Legister for today from Proven Investment. Thanks very much for speaking with us.
Yes.
And join us again next week, same time, for another exciting episode of the Masters Competition as we meet with the other participants. Follow the pros and the one novice each week on the Masters Competition. Listen and analyze the strategies with the Masters on RJR 94 FM Thursdays at 8:45 a.m. as they challenge each other to stay ahead. And also look out for their portfolios in the Sunday Gleaner. The Masters Competition is a product of Today's Money Limited, brought to you in partnership with NCB Capital Markets Limited, Proven Wealth Limited, Credit Union Fund Management Company Limited, Money Masters Limited, and the Jamaica Stock Exchange. I'm Jean-Paul Manu. The Masters is another fine product from Today's Money Limited.